Yo guys, welcome back with me Ken Willboy FX. In this video I'm going to talk about supply and demand trading strategy that banks hide from you. Banks don't want you to know. Yeah, alright. Why is this strategy so important? Supply and demand marks an area or a zone where banks usually buy or sell. You know, in a market, the retail usually they will not move the markets. The one who moves the market are the banks, or the institution, the big money, because they have the capital, but the retail, they don't have enough capital. Maybe most of people think when the market goes up, oh, because it's everybody buying it. When the market goes down, everybody's selling. No, it's not everybody. The retails, they don't really matter. It's the institution or the big banks that matters. So if we know where the big banks are buying or selling, then we can follow their trades, we can follow also their entries, we can profit. But if we trade against the big banks or the institution, we will never get any money. Our money will be drained. Our account will be blown away. That's the principle behind this strategy. So in supply and demand, the top zones are usually called the supply zones here. The zones on the top are the supply zones, and the zones on the bottom are the demand zones. Why is it called like that? Why it's supply and demand? It follows the basic principle. Let me type for you so it's easier. This one is the supply, an area where there is oversupply, and this is the demand, an area where there is more demands than the supply. It follows basic economics principle. Because, you know, trading is like buying and selling. It follows the basic economics principle. When there is more buyers than sellers, the price will go up. When there is more sellers than buyers, the price will go down. That's the principle behind this. With this supply and demand strategy, you can know the exact position or the exact zones where big banks are entering the market. Take a look at this. During the demand zones, in the demand area or demand zones, the big banks are entering their money here and here, around here, yeah, here. If we follow their money, the people usually call it the smart money, we can profit together with them. Don't trade against the big banks, because if you're trading against them, just like what I said, you will lose money. Your accounts will be blown away. The big banks don't want you to know because they want to take your money. They have the capital, you know, they control the market. They can manipulate the market. So we cannot just enter a trade like randomly. We need to follow them because they can manipulate the market, they can move the market because they have so much capital. Just like, you know, in penny stocks or the small crypto, the shit coins, people pump and dump. Usually the big players, they can pump and dump. The same here. This is Forex. People cannot move them. Even investors cannot move them. But the institution, the big banks, they can move them. Even though you said, Forex is so big, nobody can move. The big banks can. The small one maybe not, but the big banks do moves the market. That's why during like the FOMC or CPI or NFP news in the economic calendar, the market usually pump or usually fell down. That's because the big banks are buying or selling, not the retails. The retails, they cannot move the markets. We are all the retails. All right, so maybe you're asking, all right, I want to follow the big banks, but how do I do it? All right, let me explain it to you. Here, how to draw zones for supply and demand is actually like this. Let me delete this first. All right, here at the bottom point or at the candles, maybe we can change a little bit here. As you see, demand is the bottom zone. We can draw bottom zones at the reversal candle. For example, here, there is reversal. We can see some reversal here, going from downtrend into uptrend, see from red candles into green candles. Take the ones that are like reversing the trend, that are the opposite of the trend. This is the small trend is going down here, then it reverses here. Take the last candle in the bottom or at the top, either at the bottom or at the top here, just like this. Then you create a zone like this and drag it to the right. As you can see here, it touches the demand zones once here, but it touches like very small, so little here. You can draw supply or demand zones like this. Take the last candle. But what I like to do is, because if we only take one candle, the zones are so thin, the market only touches them not so often, like maybe once in a while, only once in a while. They don't touch it frequently. So what I like to do is I take the whole area of the reversal candle. This is the reversal candle. I take the whole area here. I move it from only the reversal candle here. I move it into the whole reversal area here. I take the whole area. In that way, the candle touches the zone more often. If the candle touches the zone more often, means we can enter a trade or we get signals more often. Yeah, we get more entries. That's what you like, right? Especially for scalpers. Scalpers like to entry the market quite often. And we can say that this area is the demand zone, or an area where there is more demand than supply. We can draw the supply zones here. Take the last candle in our reversal pattern and drag an area over it to the right. Alright, like this. We can say that this is the supply zones, or an area or zone where there is more supply than the demand. Alright. The more points that it touches a supply or demand zones means the better the zones. Just like this. This one, the zones got touched 1, 2, and 3 times. Almost 4 times. Means the supply zone is not bad. It's actually quite good. Like quite strong. If the zones are only touched twice, it's weaker than the zones that are touched like 3 times or maybe 4 times. During the supply or demand zones, market typically bounces. So how can we use the supply and demand zones to our advantage? All right, let's mark this so you can better understand. This was the supply zones. Supply. Mark the bottom one. This is the demand zones. When the market enters the supply or demand zones, if the market bounces like this, it enters or it touches the supply zones, then it bounces, you can enter a position, sell position. And if the market like bounces off the demand zones or the bottom one, the bottom zones, it bounces and reverses back up, means you can enter a trade, a buy position. You can enter a buy position. What if the market like they don't bounce, but they go straight through it, just like this? It doesn't bounce. It goes straight into it. Then you can set that the zones has been break, and you can enter a position according to their trend. This is uptrend, means if they break through supply zones, you can enter a buy position, just like this. But don't enter a trade instantly, directly when the market, the zones has been broken, so you enter a trade directly. No, don't do that. You wait for the market to bounce right off, to go back to the supply zones. Now the supply zones has become the demand zones here. You wait for the market to touch the demand zones, the supply becomes demand, and you enter a buy position here, and you will get a profit, just like that. Up. What if the market goes like this? Let me show you. Wait, sorry. Instead of bouncing here, instead of bouncing like this, it goes straight down like this. The same, you can now enter a sell position, but don't just, it breaks the demand zones. You enter a sell position, you wait for a pullback, and you can enter a sell position here. If it breaks the demand zones, you can enter a sell position. But if it bounces the demand zone, you can enter a buy position. That's how you use the supply and demand zones. If you learn this and you practice it, you get good at this, your win rate of your trade should goes higher, should be better. Because this one is a strategy where, you know, trading is not always like, oh, you need to entry all the time, you need to enter a position all the time. No, but you enter a position where there's high probability that the trades will go into the direction that you want. This supply and demand strategy is like one of the high probability trading strategies. Yes, maybe you need to wait the market for quite a while. It's not like instant, or you open the chart and you can directly enter the market. No, you need to wait quite a while. But when you enter a trade using supply and demand strategy, your trade should have higher win rate or higher probability of hitting the take profit, so you can earn more money. So yeah, learn this supply and demand strategy. But as good as strategy as this strategy goes, the same as all strategy. Strategy are not always profitable. Sometimes they occur a loss. So you need to still pay attention to these two things. First, please use stop loss when you're trading. Why stop loss? Because stop loss limit your losses. It's better to cut your losses than lose all of your account blown away. Now, it's better to use stop losses. Most professional traders use it. And second one, please maintain your money management. So what is money management? Money management is don't open position that are too big. My recommendation is every $100 in your balance or in your trading account, you only open a position equals to 0.01. If your balance is 200, you can start your position at 0.02. That's my suggestion for you. Use stop loss still. This strategy is good, supply and demand, but still, all the same as all strategy, good or bad, you still need to pay attention to stop losses and money management. If you want to learn more about Forex trading or trading in general, gold, crypto, please join Ken Wilboy FX. The link is down below. You will not only get like education, but you can get also signals, very accurate, 90% plus accuracy. You can also get indicators, our custom indicators, free updates, lifetime. There's more than one indicators. There's plenty of indicators. Custom made, very accurate. And you can also get a discount on trading fee on several regulated brokers, the good ones, lifetime discounts. And you can also get groups, one of the biggest and most active group in Southeast Asia or in Asia. Yeah. So you get all 5 of that only for $4 now. There's a promo. If there isn't any promo, it will cost you $100. But right now there is a special price, only $4. It's for lifetime. You will only need to pay once and it won't expire. It's lifetime membership, only for $4. One of the cheapest, but it's not cheap quality. It's very good. Our trading signals have 90% plus accuracy. Link down below. Don't forget to like, subscribe, and hit the bell icon. Thank you for watching and peace out.